And the part that we think is going to be really interesting is the ability to balance sunlight between the crops and the panels, i.e. who's getting the sun, which is what the plants need and the panels need.
Hi Mo, welcome to the show.
Hey Peter, good to be on with you today. Great to see you again.
So let's dig into the deep right away. So we talked about kids, we talked about investment and ROI.
Sure. So I think what I was saying to you last time, Peter, and congrats again on the birth of your son, is that at least the way I look at my kids sometimes, like you have a big upfront CAPEX investment, like all the first years of raising them, changing diapers, feeding them, teaching them to walk, like big chunks of CAPEX up front. And then as the years pass, that sort of moves more into OPEX, smaller costs that you have to do over time. And then I think eventually you start actually seeing some profits on the tail end, right, in our later years. Now, obviously, that's a cynical view of raising kids, but when you spend all day talking about CAPEX, OPEX, you start looking at everything in life through those lenses. But it's a sort of message to those of you with younger kids. It does get easier and it does get better.
Reason for hope.
Absolutely.
We put everything in solar terms, so that's cool. Just for the audience who has 3 kids, I just had one 3 months ago. It's a common thread that we talked about. Why don't we dive a little bit deeper into Solargik?
Yeah, maybe just one quick point again on the kids I mentioned last time, but I'm at least pretty happy and proud about. My oldest son actually started working at the company as a summer intern a few months ago, and I've already used some of the materials that he's been able to help generate in some of my LinkedIn posts. So he's already moving, as we discussed, out of the OPEX, CAPEX, actually into the cash flow part where, hopefully he's actually starting to pay back some of those investments. So there is hope for that as well, Peter. Hopefully one day it will work out for you as well.
That gives me great comfort. When we mentioned the Solargik, we talked about different aspects of the business. You guys are touching more or less all the pillars that solar has to offer. We talked a little bit about AgriVoltaics as well. So why don't we explain what Solargik does in the AgriVoltaics space?
Sure. So I think just for our listeners, or those not familiar, AgriVoltaics is a really interesting trend and combination that we're seeing. I actually just came back from the World Conference on AgriVoltaics in Freiburg in Germany, where I had the pleasure of presenting last week. And if we think about 2 of the major challenges that both industrialized and soon to industrialized countries are facing, right? We need energy and we need food. And there's an increasing potential conflict between the two in that they both need a lot of land, right? Whatever the crops of the agriculture or the grazing that you're doing, you need land. And increasingly, both for renewables, right, whether you're doing wind or solar, but predominantly I think this is more of a solar challenge, you need land as well. And the best, flat, nice, easy lands are exactly the lands that both of those groups want. Solar developers and investors to build their fields, and farmers, and even we as consumers, right? We need our food closer to home. And AgriVoltaics is the trend of really being able to combine those 2 things. So dual use of the land, right? The ability to build projects in places that were previously only agricultural, right? And cohabitate. And there's multiple advantages to that. First of all, you can build more solar projects on lands that previously you couldn't use. But there's synergy there as well, whereby farmers can get a second cash flow, right, for their farm. So think of like a family farm that's been operating for generations, but now needs to compete against bigger industrial farms. They have a lot of difficulty. And if they can add a cash flow stream from solar, for example, that gives them more security, there's a lot of value in that for the farmers. And increasingly, and again, this is something that came up at the conference last week, we're better able to quantify and measure the agricultural output benefits, right? Reduction in usage of water because the plants are being shaded, better crop yields, better protection for some of these crops. Obviously, depends whether these crops are shade tolerant or shade needy and things like that. But there are many places in the world, and especially in warmer climates, where there really is a good synergy between those. And those are the benefits in terms of, so why don't we see this exploding everywhere? Why isn't every project an agrivoltaic project? And the simple answer there is, well, because it comes at a cost, literally and figuratively a cost. It's more expensive to build these AgriPV structures or trackers at height, right? And potentially it's harder for the farmers to work their farms. And the part that we think is going to be really interesting is the ability to balance sunlight between the crops and the panels, i.e., who's getting the sun, which is what the plants need and the panels need. And one of the things that Solargik, I think, is actually one of the pioneers on is the ability to build, not just take our standard ground mount tracker and try to raise it a little bit in the air, but really approaching it from a fundamental perspective. How do we design something that is more versatile? How do we raise it in the air to make it easier to use? And how do we, for example, add agricultural sensors where we can now measure things like PAR activity, which is photosynthetic activity that the plants are having, moisture, whether it's in the soil, in the air. We can basically measure the microclimate, and then also measure what you would standardly measure with a solar project, things like irradiance, right, wind speed, production. And then by overlaying those two, we can start making really interesting decisions. For example, the same way we have a wind stow speed for a tracker, where if the wind speed reaches a certain height and the tracker needs to move into a stow position, we can have similar triggers for crops. For example, if PAR activity drops or humidity rises, right, or any one of these parameters changes to a drastic way, we can have the trackers move either sunlight or shade, depending on what the solution is, to allow for those extreme events to be solved for, again, either with protection from sun or with giving them sun rather than shade, if that's the needed solution. So we think that those abilities to build bespoke, tailored structures to allow for the activity to continue at height, at lower cost, and then have sophisticated algorithms and sensors to make smarter decisions is really where that sub-industry is going. And we're seeing this really pick off a lot in Southern Europe. Places like France and Italy have historically been the leaders. We're seeing countries like Germany and the Czech Republic, who recently passed regulations on this, are starting to join. North America, no regulations yet, but a lot of companies that are following that. And a few other markets that I think it's a little, Japan is another market that has some interesting regulations. But we're seeing it become a bigger and bigger part of the puzzle. And if I may add, what I think is really interesting and counterintuitive, people think of it solely as dual use. But if you think of this for countries where grid instability is a challenge, it's another solution for bypassing the need for transmission. So let's say I have centers of population, and the areas around those cities are typically used for agriculture. And in the past, I had to maybe build my project far away and use the transmission to bring that production to the consumption. It allows me to connect production and consumption in an easier way, because now I can build it in places that previously were not accessible, right? So that's a big benefit that I think in many markets, both in Europe and actually in India, we're seeing a similar push on that. It's even not about dual land use. It's about an easier way to match production and consumption while avoiding or bypassing transmission and moving straight through the distribution network. So that's a very big advantage that we see happening as well.
And just to double click on that, I read it recently that basically 50% of all energy that has been produced gets lost in transmission. So basically, if we put this in perspective, we can really almost double the effective energy produced and consumed as well if we have a shorter cable, so to speak, right?
I didn't think of that. That's a really interesting point. And I would even say that my guess is that in I'd say, developing countries, where on the one hand, agriculture is going to be a bigger component of their economies, are also the ones who probably have the biggest challenges of transmission. So I think that added synergy is one that we will be able to see in many, many countries. South Africa is who I have in mind for that, in terms of places where, right, like the transmission is a bigger challenge, but we don't have to go that far. I mean, even in North America, I know that's a very big challenge in terms of transmission, and that's why there's a big push around DG, right, distributed generation, to be able to do that. And I think AgriVoltaics is a really big complement to DG. And I think, for example, in North America, the whole world of community solar, right? The biggest pushes we see around agrivoltaics in North America tends to overlap in community solar. For example, we're members of both the North American Community Solar Organization and something called Solar and Farming Association. And the overlap in terms of the players in those is very big because they're solving for a very similar challenge. It's just one of the mechanisms that you can bring DG into the mainstream.
And if you talk about the return part, how would that impact potential returns for both investors and developers?
Yeah. So that's actually one of the things that I was presenting last week. And I think if I look at sort of the growth of agrivoltaics, I think the first few years were very academic and theoretical in terms of like, okay, let's build small pilots and make sure that the crops can actually live underneath these panels and that we're able to do this. And I think where we are now in the second phase is fine-tuning the economic model, right? Because I think there's really two main challenges here. One, and probably the biggest one, is that we suddenly have two distinct or potentially distinct stakeholders that are opposite in their desired outcomes, right? The farmer wants the second cash flow, but they mostly want to have maximum output for their crop outcomes, right? Like that's why they're farmers. And the investors / IPPs just want to generate as much energy as possible and sell it as high of a price as they can to the grid. And there definitely is synergy, right? And that's why agrivoltaics is going to take off. But there's also some potential conflict around, okay, who gets the sun during which hours, right? Who gets to control the arrays? If you think about this, we're producing a future cash flow. How do you distribute that future cash flow between the farmer and the solar investor, right? Now, on the one hand, the solar investor is going to want to give the farmer the minimum amount that they need to justify and to be able to get the farm. On the other hand, the farmer wants minimum interruption to their daily operations. And the way this gets done is still being sorted out a little bit. And I think this is something that's going to be very region / country specific. So I'm not ready to make a statement around how this is going to work across Europe. I think we will see very specific cultural differences between the countries. I will say that, for example, we know that the regulations in France and in Italy, to neighboring countries, are very different when it comes to how that cash flow can be distributed. By and large, most of the countries that have regulations around AgriPV, the regulations are meant to do two things. They're meant to protect the agriculture because in terms of the financial outcomes, the cash flow from solar will absolutely dominate the cash flow from agrivoltaics, right? So in many countries, for example, there's a regulation of you can't have a GCR, ground coverage ratio, above a certain level because they want to make sure that you're not doing fake agrivoltaics and you're really actually growing crops. And in some countries, it's also minimum yields, right? Like you have to measure a base year and then you have to produce anywhere between, let's say, 60 to 90% in Italy or in Germany, for example, right? And in France, to make sure that you really still are doing the agriculture, right? And that it's not just a fake way to get yourself more land and avoiding the agriculture. So that's what the regulations require you to do. The flip side is that in some of those cases, they will give you incentives, either in terms of tax breaks or higher PPAs, power purchase agreements, so that you get a higher payment on the energy generated because they understand that this is in an early stage and you need to incentivize it. Yeah. But both of those components, right, the regulations and restrictions and the upside, assume that there's an increased cost in building agrivoltaics. And there really is typically. If you're building structures that are anywhere between 2.1 to 3.5 or 4 meters in the air, there's added cost of steel, there's added cost of labor, right? And it's a more complex project to build, potentially harder to maintain because you need to reach these panels that are now higher up. What I believe will hopefully potentially happen, and this is a prediction into the future, is that by doing agrivoltaics, the investors will potentially be able to do one of two things. Either switch their land cost from a CAPEX model where they had to buy the land upfront, right? And that's a big chunk of money, to being able to now pay an OPEX model, as we talked about in the beginning, CAPEX, OPEX, right? Where it's like a yearly or monthly rent, but that's shifting that cost into the future, which from an IRR perspective is very, very meaningful because it avoided a big cash outflow upfront and allows you to distribute that differently. And my assumption is that if I would typically be paying a certain rent, let's say $1,000 an acre, 1,000 euros an acre for non-farmed land, my assumption is that if now a farmer who's still using that land, they should be willing to accept 500, 800, 300, I don't know how much, but presumably less from the rent that they would be getting without using the land, right? Because they're still making their own cash flow. Now, that I don't know that that's happened yet, right? But I'm assuming that market forces will be able to balance that out. So eventually my land cost goes down, and that will potentially be enough to balance the fact that I had a slightly increased structural cost up front to basically allow this to thrive even without the need for incentives. That's a hope and a forecast. I haven't seen that fully play out yet. And I think that's the dynamic that investors are looking to see happen. And it's what we, as I'd say, a technology manufacturer, are looking to do by making our structural cost and our ease of building so that it's creating a smaller and smaller delta as relative to standard ground mount projects, right? To make it so that the cost does not have to go up. And then land profits or reduction in land costs maybe even gives you better profitability. That's wishful thinking. It hasn't happened yet, but that's kind of where we're trying to push with this.
Indeed, and I've spoken to a couple of people in the agrivoltaic space, and there is also a little hidden Trojan horse as well, that sometimes PV can be more profitable than agriculture. So that's why incentives that you mentioned are absolutely critical, because why would the farmer actually farm the land if he can just put the panels on and that's it? He makes more money, he doesn't have to do anything. So that's why those incentives really need to be designed well to achieve the desired outcome, because otherwise we are shooting ourselves in the foot.
I completely agree. And I think that's why, and when I present at conferences, I usually show a slide, right, that has this comparison across European countries. And you can see, I mean, they choose different numbers, but the majority of these regulations are exactly what you just said, to prevent the steamrolling of agriculture. So for example, you have to do it at a little bit height, right? You have to do it and measure the yield. You have to show, in some cases, that you have a way of controlling and measuring the agricultural outcomes, right? And that you have a maximum GCR, again, ground coverage ratio that you can do. So you're not just covering the field, but you're really leaving the room for the farming and the agricultural to take place, because the cheapest and most efficient way is to have basically fake agriculture and nothing at all. And then you're really just allowing or providing a laundering of land from agricultural use to industrial/solar use, right? And I think that's what the regulations are intended to prevent.
Makes sense. How do you guys actually help on this front? What type of solutions do you guys provide?
So we see it as really three pieces: the structural, the control, and the forecasting. So I'll actually start from the last one, the forecasting, because I think it's the one that's most complex and probably hardest to solve. If you think of a scenario where you have to allow a balance between the agriculture and the energy generation, there are times that you will potentially need to prioritize the agriculture, meaning do something that we call anti-tracking. And instead of positioning your panels for maximum generation, you're allowing sun or shade through to the crops. This comes at a generation cost. And one of the things that standard tools like PVSys, for example, don't know how to do is they know how to model energy generation when all you're doing is tracking for energy. But they don't know how to model what happens if between May and June you want to have, for peak growing period, anti-tracking from sunrise till 11 in the morning. Right? And what we've designed is an internal tool that we use for production. It's not meant just for agrivoltaics. It's our general ray tracing tool that we use for all of our algorithm designs. And what we can do with this, and we're actually we've worked on a paper and a pilot project together with Colorado State University and Cornell University and Sandbox Solar, is a pilot where we measure exactly this. What happens if we do this? And our biggest input for this pilot was doing that model up front. And we've analyzed that this model, where from May to June, right, we're prioritizing sunlight during morning hours for the crops, would culminate in a 10% reduction of energy. Now, you might ask yourself, is that good? Is it bad? And the answer is, it doesn't matter. What matters is that the investor can now go to the bank and say, like, look, I'm going to do AgriPV. It's going to give me 10% less energy. And here's the tool and the study that I use to measure that. So you don't need to worry about me not producing whatever amount of energy is expected. I have a tool that can model that out. Now, that's the main thing that we were trying to solve here. Backing one step behind that. Oh, sorry, go ahead.
Let's sum it up for the audience a little bit in a more simple manner. So what you guys actually have is a tool to dynamically calculate the yield and the impact on production, right?
Yes. And that same tool or the same capability does two things. It both is what helps us design the algorithms to know how to manipulate and move the trackers as necessary, right? That same tool has the sophistication to forecast what will be the impact, right? It's two sides of the same coin, right? Because the forecasting is also what lets me do the control and know when is it better for me to do what angle, right? That same tool will allow me to then calculate what will be the impact of not choosing the quote unquote right angle for generation because I'm now doing something else. So it's the same capability and it's the same algorithms that then go into our SCADA, our software control for the power plant to pilot and drive the motion of the tracker.
So let me see if I understand this correctly. What you guys can do with this at the end of the day is you can really translate this into financials as well. So essentially, the end goal or the holy grail of this whole process is to have an idea or be able to present to the investor, okay, farming 20% crops and 80% solar. This should be your expected yield, both in terms of energy produced and also crop. And then if you tally the two up, you will have a dollar figure at the end of the day where you will be able to justify or not justify your investment, right?
Yes, I'll explain further. This is a process that happens pretty much with every solar project. It's just a little bit easier with every solar project because you're not balancing two things and you're just taking, okay, what's my maximum expected production? And I'm multiplying that by whatever rate I would get for the energy, right? So this happens pretty much with every standard solar project. The nuance here is that if you're using standard tools like PVSys, you can't simply calculate whether you're reducing 10, 15, 20%. What we're providing is that exact and accurate calculation of how much energy loss you're going to get by utilizing a certain agricultural shading pattern. That's what is different about an agricultural project, and that's what we're allowing to do is run this financial model calculation with a more fine-tuned number based on what needs to be given to the agriculture. Now, just for clarity, we are not the agronomists. We are not the agricultural experts. We need those inputs from locals. This is sort of the trust the boots on the ground in terms of what are the shading patterns needed. What we're doing is we're translating that agricultural agronomist advice and input into both energy generation and then, to your point, the financial implications and outcome on the back end.
Yeah, I mean, this is what any good software or software and hardware combination should do, right? Translate the real world into the digital twin, so to speak. And then with that digital twin, you are able to move and maneuver a little bit better and much more efficiently than having to build the whole project. So that's quite fascinating. We talked about this before the recording, but would you consider yourself more of a hardware software company or a combination of both?
That's a good question. I would say both, and for a few reasons. One, our products that we ship and deliver to our customers every day are both, right? Meaning we have physical hardware that we manufacture and ship, right? So we're certainly a hardware company. In terms of our people, we actually have more software engineers than anything else in the company. I'd say our biggest differentiator and where we're looking to push the boundaries is going to be much more around software and digitization and the ability to control our power sources more, make smarter and counterintuitive decisions, and that requires very sophisticated software. But I do think that our unique angle in the market is really that combination. And for example, a lot of the industry there's a handful of players that really design and build what I would call tracker control units and software, and they're fairly ubiquitous across the industry. And then there's, say, 2 or 3 or 4 sort of major hardware designs, but they're not really 100% tailored. And if you make, for example, a small hardware change, that's not going to waterfall and transition into the software, at least not quickly, right? And literally, our hardware and software engineers sit on the same floor, door next to door, and anything that we roll out, right, had to flow through both of those departments. So the tailoring and customization of both the hardware and the software control, right, is one that we believe brings a lot of advantages in terms of really adding much more granular and sophisticated control that you don't get by just combining pieces that were not designed together. And I think the reason that this was sort of more apparent to us than maybe other companies really has to do with the background of the founders and most of our senior leadership. They came from a company, they're actually the founders and the senior executives of a company called BrightSource, which many people are familiar with from the concentrated solar power world. So they built the famous project in Ivanpah in North America, where you have these turbines and heliostats pointing sun at the turbines, and through steam, you're creating energy. And people who are familiar with that technology know that you're not buying panels from one company, inverters from another, and trackers from another. You are one company that designs and brings that together, because the level of accuracy that you needed for tracking there and for being able to not overheat the turbines, they would literally blow up, right? Or if you miss, then it's not like you're getting 90% of the energy. If the sun ray reflected back misses, you get zero, right? So we're very familiar, and we come from this world that requires very deep integration of software and hardware. And I think that's one of the advantages that we're bringing in and looking to translate into the PV world, right? That distinct integration between hardware and software. And, it's interesting. And this is really happening, I'd say, in the past few weeks. In this past year, we've seen some really big integrations in the tracker market. Nextracker, obviously the leader in the industry, brought a company called Ojo that do foundations. Array Technologies, also one of the leaders, just bought another company that does foundations called APA. And we've actually gone in the other direction, meaning instead of integrating further down in the value chain into steel, we're looking to go in the opposite direction. We believe in the need for integration and for packaging. We're just doing it in the direction of the software control, plant control, and really providing our customers a more unified view and control of the power plant, rather than looking. It's not that I'm not criticizing those M&As. There's a lot of value that they're bringing by combining foundations and structures. In fact, we're looking at doing similar stuff. But we, from our own natural DNA, coming back to your question, our DNA is really that focus on hardware and software integration. And I think what we're constantly looking for in the industry is places and components of the market where that value is really helpful to our customers. AgriVoltaics is one of them. The others is things like power density or slopes, where the ability to do smart backtracking and control and have smaller Lego pieces to match those slopes brings a lot of value. So that DNA is also pushing us to look at places in the market where we can really bring some added value to the customers.
A couple of points here when it comes to vertical integration. So it's quite interesting that you guys are going more upstream to integrate the hardware and software instead of going down to the raw materials themselves. But I think the further down the line we go, the more efficiencies this could bring both to you as a company and also to customers ultimately. And that's the ultimate goal, right? To serve your customer better and deliver an energy solution. So we shouldn't be thinking about components, shouldn't be thinking about building solar projects themselves. We really should think about the whole shebang. We should start thinking about the energy solution of the solar panels, the battery packs, and how that's being hooked up to the grid. And I think that's where we should be able to deliver a lot of value to the customers and ultimately also bring the cost of solar down.
Couldn't agree more. And I would even maybe suggest or pontificate with you that can be taken one step further, because I think the question that you bring up is a fascinating one. And your point is, let's not look at each component individually, right? Like, let's look at it holistically from a power plant perspective, right? And the solar plant is a power plant. And I think that in and of itself is innovative and absolutely what we're working on now. And I think if we want to be bold and visionary, we can even look at that one level up, as in the overall grid. And I think one of the challenges that renewable energy has overall is how does that fit into the grid, right? Like we all know about intermittency, duck curve, right? And that's one of the things that we're solving for, right? We look at Iberia and what happened when there was a misalignment in grid recently, right? That went down. We've seen that with ERCOT in Texas, in the US not that long ago, right? This whole question of grid stability is a major question as well. And by focusing on the software and the control, right, and understanding that power plants, the same way that a tracker or a battery or an inverter is one component in the overall plant, one level up, the one plant is a component in a broader grid, right? And for example, like we said before about being able to ease some of the transmission challenges and avoiding to just transmit, but work within the distribution network is right helpful to the grid. But also things like forecasting, energy shifting, right? Transparency, flexibility. These are things that power plants, right? And especially this is a challenge for renewable energy. And I think when some people are more skeptical of renewable, they rightly bring up these questions of, well, what if you stop transmitting? Like you go in, you go out, a cloud comes over, you're no longer generating, you're going to start spiking my grid. So for example, one of the things and one of the capabilities that we have around energy shifting, I think is a good example for this. Let's say, and in many mature grids, this already exists, you would face a penalty if your production drops by more than a certain amount, right? If whether you're looking at a 15-minute forecast, right, you have to adhere to these promises that you make to the grid. And if you don't, you would potentially get fined. And now let's say you're a solar power plant and you know that there's a cloud coverage coming in the next few minutes, right? Typically, okay, but there's nothing that you can do if you don't control your production and if you're not geared at thinking about this in a grid level way. So one of the things that we can do is instead of just waiting for the clouds to come, right, have a massive drop and then a massive surge. If we're connected to weather sensors, sky cameras, fisheye cameras, etc., which we are, then instead of just having the spike, we know it's coming, we can actually artificially start lowering the production beforehand, what we call mechanical clipping. And we have a patent pending on this, for example, we would tilt the panels away from the sun slowly, start bringing down the production. Again, a tracker would never do this on its own because it's just trying to produce the maximum. But if you're looking at this from a grid perspective, like you actually can it's kind of like sacrificing a pawn, right, to save the queen. It's like, okay, I'll give up a little bit production, but I'll smooth the production. And then when the sun comes back, I'm not necessarily going to start producing as much as I can again, right? I'm going to slowly start turning back into it so I can have a more gradual shift rather than these big spikes, right? So those are the types of things that we imagine being able to do when we're connected to power meters, inverters, batteries, right? We can make smarter grid level decisions, right? Not just generate as much energy as possible. And I think that's part of the shift from just looking at a power plant from an LCOE perspective to overall IRR perspective or overall grid stability perspective. And the more renewables make it into the grid, I think the more sensitivity the grid will have to the intermittency and the other challenges, which is why we think it's going to be a bigger and bigger component, right? And when you look at, let's say, the California grid or other grids, I think Nordics have a similar challenge where, not challenge, it's a benefit. When you have so much renewable in your grid, you can't rely on, right, like coal or gas or whatnot, and you need to have some solutions for what happens with the intermittency challenge. And that's something that we're definitely looking at.
Indeed. I mean, I guess the only challenge here is how do you actually align those stakeholders? Because obviously the power plant owner or the investor who wants to produce maximum output might not think about the grid side of things. So that's going to be a little bit of a challenge to bring those people together and basically have them on the same page. Again, think about a holistic energy solution.
I actually think that will be easier to solve than agrivoltaics. And the reason is the utilities and the grid managers are usually pretty good at pricing this into the market, right? So for example, if you pay a fine for that drop, I as the investor, not as the utility, as the IPP, can take that into my calculation. And if I know what my fine is, right, like, and I'm saying there's not somebody sitting there and typing this, right? This is pre-programmed into the SCADA, right? But if I know what the fine is, right? The logic of the system will make these decisions naturally. It's not the grid operator going around the IPP. It's the solution that we're providing is to the IPP itself, right? So the investor, the asset owner, is the one who's making these decisions based on profitability. We're not asking them to sacrifice money. We're asking them to sacrifice energy production, right?
Yes, because essentially, if you have a perfect market, the market takes care of the regulation itself. The tricky part comes when the market is imperfect or somewhat tilted by different tariffs, and then we face a little bit of a different challenge.
Yeah, my assumption is that, for example, the algorithm that I described that's doing that energy smoothing is not something that we would run or we would not recommend to our customers to run in a market in which they're getting a flat PPA, right? If they're getting a flat PPA and they're just getting paid a certain cent per watt for every watt that they generate, and there's no fines for not producing, and it's just a simple market, we wouldn't run that algorithm, right? Like we would say, we wouldn't even bring it up necessarily. We would only recommend using that if there's a financial benefit for them doing that, right? Like, so the same way we wouldn't prioritize the agricultural outcomes potentially if there was no commercial feedback mechanism between the farmers and the investors, right? So these are capabilities that we would provide to our customers and basically say, use them if they help you. If they don't use them, right? I'll give you a little bit of a different example, because I think your question is spot on. It's a little bit around this rule of thumb that historically was true, where more energy equals more money and profitability, right? And in those worlds, you would typically look at CAPEX and LCOE as the most important measures, right? Because if you built the same amount of product, right, you want to generate every single watt as cheaply as possible with the assumption that when you sell that watt, you'll make money. But there's a few things that have changed and I think have required us to look at this in a bit more of a sophisticated way. I think in Europe, first and foremost, is the aspect of time of day pricing, right? And whether that partially was a result, and we saw massive changes in this after the beginning of the war between like Russia and Ukraine and the Russian invasion, and that dramatically started moving around energy prices. And another thing that we see happening more and more is the influx of solar energy to the grid is pushing down midday prices, even to the point of negative pricing, right? On the other hand, the growth in demand in the shoulders of the day, early morning, early afternoon, has created much more demand, and basically the grid's response is raising the prices. It's actually exactly the same dynamics that we're seeing playing out in the storage world, right? And for example, markets in which we're seeing more and more battery storage come in, they're solving for that same problem, right? Where we're generating during the middle of the day when it's not worth much, but we need to consume it in the shoulders when it's worth a lot more. And that's something that solar trackers, not just Solargik, all solar trackers are really good at, is the excess energy that they're generating, is generated and consumed exactly in the shoulders when that energy is worth a lot. So we see a lot of markets, for example, Central and Eastern Europe, we're seeing a big surge in solar trackers entering the market. Why? Because previously, if I was in Romania, Bulgaria, the Czech Republic, Southern Germany, where a tracker is only adding maybe 10 to 15% energy, but costs more to install, maybe I'm taking some risks. In a flat PPA world, right, where energy is worth the same cent per watt, whether it's at 12 in the afternoon or 5 in the afternoon, I don't need to take that risk. And it really isn't worth it for me to install a tracker. But now, where maybe energy in the middle of the day is not just worthless, it's actually negative. I would pay a fine for generating and sending it to the grid, versus maybe now I'm getting 3 to 4x in the shoulders, right? It's no longer just around how much I generated and at what cost. It's when I generated. So we recently ran an analysis of a project that we're designing in Eastern Europe, and simply changing the tariff assumption from, let's say, I think in that case it was 5.5 or 6 euro cents per watt in terms of the tariff. When we balanced it out by saying, look, there's about a quarter of the day where you're going to get a 30 to 40% increase. very reasonable assumptions, right? So instead of 6 cents a watt, we're looking at 6.5 or 7 cents a watt. That changed the project IRR by more than 2.5%, right? I believe it was somewhere between 10 to 12.5. That is a dramatic outcome for an IPP, right? Like 2.5% IRR increase. And I think that's why we're seeing more and more projects in countries that previously mostly did fixed tilt and static structures moving into the world of tracker, because that time of day is increasingly important. And just in case it's not clear, batteries will absolutely be part of that. They'll be a major component in that, right? As batteries come down in cost, they'll be deployed more exactly into those markets where there's more of a disparity between time of day to basically allow for that arbitrage, right? Middle of the day generation, side of the day consumption, right? But we see trackers as providing a similar benefit at a much lower cost to batteries in terms of pushing that production to the side.
Indeed. I mean, typically Europe is not the market of trackers, right? It's mostly North America, etc. But if you can respond more flexibly to the grid and to these type of price changes, of course, it makes financial sense. And if we put the investment next to it as well, it's a fraction compared to adding a huge battery pack on your project.
Great point. I would maybe add a tiny bit of nuance to that when it comes to Europe, because I think it depends a lot in which markets in Europe we're talking about. For our viewers or listeners who are maybe not familiar, a tracker's advantage versus fixed tilt is more pronounced the closer you move to the equator. So for example, if I was literally in Ecuador, right, standing at the equator, a tracker versus fixed tilt would be able to add around 40 to 45% more energy, right? Because there's no advantage for the fixed tilt of having that southern facing tilt, right? And the tracker is not giving up anything by not having that, and it's literally just tracking the sun moving right above it, right? So the advantage that it gains is going to be around 40 to 45. We've seen that in some parts of Brazil as well. Obviously, right closer to the equator, we've done some projects there. But so for example, Southern Europe, places like, again, Iberia, Southern France, Southern Italy, right? Like those are markets in which you'll see maybe a 25 to 30% advantage for trackers over fixed tilt. You actually do see quite a bit of tracker projects. The further north you move, right, like through Central Europe and then again into Northern Europe, Baltics, Poland, Germany, etc., there you could even see a single digit advantage where using PV simulations we'll see 7 to 9% of added energy. And that's why you'll see less and less tracker projects the further north you go. Coming back to our previous point, right? When you're only measuring energy output rather than when you're generating that energy, a tracker project will be less attractive for a 7% or 10% gain because you obviously have to pay a little bit more for the tracker up front. But if that tracker is also shifting it, right, and now the energy that you generate with the trackers is concentrated, right, in those valuable hours, more and more, that's where the money of a project lives, right? Projects that are not able to generate either through storage or through trackers energy in those shoulders have an increasingly harder time in penciling, right? So that's why we're seeing sort of the trackers, I don't know if the word is invade or move further north in Europe into places where they previously were not used for, and they were absolutely right for not using them because they didn't make financial sense. But that time of day pricing has a dramatic effect on the tracker industry.
I think there is a big if to add as well, that you really need to be able to operate your trackers efficiently. And this is when the optimized software hardware combination comes in, because if you are not able to respond to the demand to slight changes in weather patterns, etc., your yield is going to be off, and then the whole thing goes out of the window.
Yes, meaning you have to actually deliver on what you promise, right? I mean, paper, there's an expression, right? Like the paper will absorb whatever you put on the paper, but it has to actually then translate into the real world. Absolutely.
I've been talking to many of my EPC friends, and they are really careful of overselling the project and the production, because then contractually speaking, they get into trouble. So you really need to be, or you want to be, as close to reality or potential or forecasted reality at that point in time when you actually sign the project, then overselling it, because then you're in big trouble.
100%. I think you bring up a very interesting dynamic that it's the triangle between the EPCs, the technology providers or hardware providers, right, and the investors, right? Because exactly to your point, the investor in the IPP is going to hold the EPC accountable for production, right? On the other hand, the EPC has no upside in the future production or in the time value of money, right? They just need to get in, get out as quickly and cheaply as possible. But for example, they don't benefit from a system that is more efficient 10 years down the road. So, and it's just, I guess, checks and balances on a project where the investor, obviously sort of sitting at the top of the pyramid there, wants as cheap as possible, as efficient as possible, as reliable as possible, and as future profitable as possible, right? But then there's this dance between the EPCs and the technology vendors where sometimes, right, like we've seen this in conversations with the same EPCs, will explain some of the advantages around efficiency, right, around energy generation, ability to control that. Like, I don't care. I got paid X amount of cents per watts to install this. Like, that's all I want. I want to know that I'm not going to have cost overruns, time overruns, right? And that after my 2 years, when I've shown production, I get my final deposit and I can say farewell, right? So it is a very interesting dynamic with the EPC.
And maybe circling back one thought before, the time value of money. Can we define this for the audience? Because this is a super important term that you mentioned.
Time value of money. Back to Econ 101, right? It basically is the concept that $1 today is not worth $1 tomorrow, right? And that money over time, or I'd say money that I will be awarded in the future, is worth less for me now, right? It's the same concept of an interest rate, right? Of needing to provide some kind of a compensation for giving somebody money now if they're only going to give it back to me in the future, right? And I think it's a very important aspect of a solar energy project because, for example, let's say I'm generating $1 million a year, right, in combination of energy and the tariff, and I'm doing it for 25 years. It doesn't mean that the value of my project is $25 million. Why? Because the $1 million in 25 years from now is going to be worth a lot less for me now, right? So there's something called discounted cash flow, which is a way to calculate what is the value of $1 million 25 years from now today, right? And it has to do with interest rates, cost of money, etc. But the simplest way of explaining it is that $1 is worth different amounts depending on when it's being consumed or used, right? And the simplest way is the other way around. Like if somebody gave you $1 today, right, like and asked for it in the future, that's a service that you're getting, right? If he or she are letting you play with that dollar for 25 years, right, and you only have to give them something back in the end, right, that's worth a lot for you. So that time value of money is how much am I willing to pay to get that dollar or resource now, right? And it's very important in solar energy because both in terms of when you're incurring certain costs or when you're receiving your cash flow, right, needs to be calculated and adjusted. At the end of the day, you would create something called the net present value, NPV, which tells you, in a sense, the value of the asset that you're getting, right? And it's by calculating how much I need to put up front, what does my future cash flow look like? In a sense, that is the way to price the value of an asset. For those who are involved in the stock market, right, like in a sense, theoretically, that's what should determine the price of any asset, not just solar energy. The value of an asset is what am I paying up front and what am I getting from it in the future?
Over what period?
Exactly. And at what level of risk, we should say, is also an important aspect here, right? Like something that has a riskier return on it would be worth less to me now. So risk definitely plays a factor in that calculation as well.
Indeed. And if we layer on top of this the interest rates, we can clearly see as soon as the rates have peaked across the globe, we've seen a quite big of a squeeze in terms of cash flow on solar projects as well.
Yes.
And the faster those rates can come down, or in some cases in Europe, we have some discounted or preferential rates for renewable projects. That's super important, both for developers and the whole value chain as well, because everything is upfront costs, right? You need to pay your installers, everybody, more or less today. And I think that the more of these vehicles are put together, especially they will have a huge knock-on impact on the whole solar world and also renewables as a whole. Which brings me to my next point of the big bill from Trump, which is really throwing a wrench into the whole system. And I was reading through the details the other day, but it's going to slow the solar world down massively.
Yeah. So I need to be a little bit careful with the analysis of this, both because I've read summaries. I haven't read the full thing yet, and obviously to have a strong opinion on it, I would want to finish doing that. I think the simple answer is, well, all you need to do is look at the stock prices of companies, right, that are US heavy or right, where most of their activity is focused on the US, and you can see that they've suffered significant drops, right? Fairly easy to find some of those companies and just look what happened to their stock price over the past few weeks. I think there's some nuance in there where it seems, again, I'm not sure about this, but it seems that more of the losses and the decline, I think it's going to residential and some C&I stronger. And actually, Peter, exactly because what you talked about before in terms of the interest rates, right? And the reduction will make it harder for individual households, right? And for some businesses to fund some of these projects, which also depended a lot on the incentives, right? The ITC credits that were in there. And it will make it harder for them both to get the financing and for it to be attractive enough for them to move forward, right? So if you look at, again, companies that are more focused on the residential and C&I, right? Some of the inverters that are out there in the market, they were probably hit more by this. But then if you look at the fundamentals, and this is why I choose to remain a little bit more optimistic. And I've seen quite a few research papers and studies on this where about 3 to 5x, I don't remember the exact number, but definitely at least 3x of the investments in solar in the US were in red states, right? Meaning in states that Trump won, and many of them won even big, and they're still investing in solar energy. And it's not necessarily...
Makes financial sense.
Exactly, right? And you look at the utilities, and right, you look at even though I kind of said LCU is missing some things before, right? But if I come back to the LCUE discussion, and I look at it, right? Wind and solar have a much more attractive LCOE than the fossil fuels, right? Like from a pure business. And the industry will maybe slow down now, and especially players, for example, that either were not sophisticated enough or just sort of jumped on the bandwagon and basically said, great, I get 30, 40, even 50% ITC tax credits, right? If you hit enough of the adders, domestic content, energy communities, right? Some of the things that we had in the US, it was not that hard to build, right? And I've seen projects that had a 30 to 40% IRR. Now, it's great if you can get it, but you don't need to be able to get a 30% IRR to move a project forward. In many markets, 10 is really nice. So there is some room there, and I think we'll see a shakeout. I'm not necessarily saying all the players will survive, but I do think that there's enough fundamental business value for these projects to come back. There might be some consolidation. Not every project will be built. I think it will bring back more discipline around actual CAPEX and design. For example, I know from projects that we were involved in and saw where the investors and the EPCs didn't really care about the CAPEX, and they were mostly focused on being as conservative as they could, right? And they didn't need to take any risk to get those rewards, right? And I think what we're going to see is a reshuffling of that risk-reward metric. IRRs might come down. Developers, IPPs will be pushed to maybe make a little bit riskier decisions, or maybe take non-perfect lands, right? Or look for a player that they haven't worked with before. And there'll be a little bit of that shakeout to bring down their cost, and they will still pencil, right? There might be a decline, but I don't think that industry in North America is going away anytime soon.
For sure. And from what I heard from the market on both sides, both residential and utility scale, some companies actually welcoming it to a certain extent, because as you mentioned, it's going to trigger a kind of cleansing mechanism of the weaker players being filtered out, and that's going to produce a stronger industry ultimately. And on the other hand, they also mentioned that the incentives are nice, but it kind of perverts the market a little bit, that you're actually not playing on a level playing field, right? Because you have different incentives in different states, countries, and then it doesn't come down to who's the most competitive and who's delivering the best solutions, but who's able to play with these kind of little backdoors and deliver solutions based on those, which is ultimately not really sustainable in the long run.
It's interesting. I've heard similar things. What I think is interesting, and we're wading in tiny bit into politics here, is I haven't seen a lot of North American companies say what you just said out loud, right? Because you can't really say that when you also know that other companies are going to like close or suffer and right layoffs, etc. And I'm not sure that all of the players have sort of fully acquiesced to the fact that this is the bill, and they're still trying to see if they can, right, like either in follow-on legislation or in sort of legal interpretation of the way the rules. I think there's still some fighting going on in terms of case law, etc., to play out. I think it's a very reasonable statement to say that some companies might feel that way. It'll be interesting to see when they're willing to say that out loud. I haven't seen it out loud yet, right? But I'm sure that people are saying that, right, in smaller circles.
Yeah, it's difficult, and of course, like it's a moving target for everybody. So nobody can really just say how this is what's going to happen, because as you see, everything is changing every single day. So it's really difficult to adjust to it.
Yeah, absolutely.
And on that note, we are slowly coming to the end of our time. I have a couple more questions. The first one is, what do you think will be the biggest advantage of AI and the application of AI in solar?
You left the easy questions for the end, right? Like that's just a 30-second answer. Like that's probably an entire podcast
episode.
So I'll try to keep it brief. I think so. One, we at Solargik have already launched some AI capabilities inside of our software control. We're going to be releasing some new content around that, I'd say, in the next few weeks. It's definitely a big push of ours. Where I think we might see overall in the industry more AI, probably around things similar to IoT, right? Internet of Things. So things like preventative maintenance, more forecasting, more decision-making for the software, right? To like drive and motor the trackers, possibly in areas like preventative maintenance, both for the actual components, things like when do I need to do my cleaning? Should I wait? Should I not wait? And then where I think there's some really interesting opportunities and something that we're definitely pushing is around loss analysis, right? Like let's say I believe I should be generating 100 watts an hour from this specific area, and I'm only measuring 85. Like where are those other 15 hiding? Why am I not generating them? Is something broken? Is there not enough radiance? Is there cloud coverage, right? Is there something that I can do in real time to calibrate / quote unquote chase those missing watts? Can I either do that manually? Do I trigger an alert? Will the AI be able to eventually do this themselves? I think that's a big piece. I'm in touch with it. I'm familiar with some players who are using this to do better and quicker designs. If right now designing a field is a tedious process, if I can have an AI that sort of optimizes that, think of like a PV on steroids, right? That can do some of this design. Digital twins you mentioned before, like site maintenance, asset ownership, asset management. I think those are all areas that are ripe. And the last thing I'll say is on the grid connection, right? The ability to better connect multiple data points, make smarter decisions, and interact both with energy markets and financial markets, right? I think there's definitely room for that as well. And I think different players are taking that in different directions.
Some common theme that keeps coming back on the podcast from more or less every single guest is that the less siloed we become in solar, the more efficient and the better solutions we will be able to deliver. And I really only see this one limitation of AI. The more access we can grant AI, which is not going to be easy, right? Because everybody is trying to protect their data, their projects, and you're not going to give it out there just like that. If you can find the right way of somehow cryptographically sealing that data, but still working with it, that would be a huge, huge advantage. So I think for people out there, if somebody wants to take a stab at this, I think it's a huge business opportunity.
Couldn't agree more. I think the breaking down of silos, and actually in my previous life, I used to work as a marketing consultant at some points, and I was involved in helping companies improve their messaging and building out that type of content. And many different companies across many different industries, right? Especially when you were looking at things like combination of hardware and software. I mean, we're clearly not the first company to think of that combination, and it plays out differently in different industries. But that breaking down of silos, I think, is a common theme. I couldn't agree more. I think you brought up the question of AI in terms of data safety, right, and sort of cryptographic, etc. The flip side of it, and for example, I think that's part of the AI race we're seeing across the marketplace is if you can be the one to develop that capability, you don't necessarily want to share it. So I think if you can own it, right, like you're going to try to guard it, not just from a data safety, from a proprietary intellectual property / competitive advantage vis-a-vis the marketplace, right? I think we're in the early days of that, but I agree with you. I think it's really interesting. And I think some of the bigger winners and losers in the coming years are going to be the ones who better harness this in terms of their business models and strategies.
Exciting times ahead for sure.
Absolutely.
And if you had one ask for the audience, what would it be? What would you or Solargik be looking for?
I'd say similar to and I'm paraphrasing because I don't remember the exact statements of the Statue of Liberty of like, bring us your tired, your weary, right? And that was sort of the welcoming call of the United States to immigrants. I would say, bring us your crappy and challenging and difficult sites and let us fix them for you, right? I think where we're focused in the next few years is really unlocking the full potential that I think solar energy can have. And many times it gets bottled or ignored where people assume, oh, that's so challenging over there. There's no way anybody can build a project there. So my ask is, bring us your difficult projects and we will solve them, right, together with you. And I think that's where we can actually have some really interesting partnerships. Like we're doing some crazy things in terms of capabilities around slopes, power density, AgriVoltaics. It really is a very different tracker than anything else on the market. Give us a shout. And let's see if we can find some good partnerships.
Amazing. And we'll put that on the show notes for sure. And what would be the right way to reach out both to you and Solargik?
So, and Peter, I can give you like a slide with my data information and you can, maybe share this afterwards.
I'll plug it in here.
The easiest way is our website, www.solargeek.com. LinkedIn is my favorite channel, right? You can find me on LinkedIn, Mo Horowitz, Solargeek. You'll find me. My email is mo, @solargeek.com. Send us a note and we'll connect.
Amazing. Thank you, Mo. I really appreciate your time. I can't wait to do this again. I certainly learned a lot.
Absolutely, Peter. It was my pleasure. Thank you for inviting me. I enjoyed the conversation. I learned a lot today. Right? I need to start thinking about some of the questions you asked me around AI, the future. Really interesting. Thank you very much.
You can organize a transparent session on that for sure.
Absolutely.
Cheers. Bye.
Cheers.